Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Q&A. Good evening. Today is Thursday, September 18th. I am analyst Jiang Jiao. If you found our previous episodes helpful, please like, subscribe, and share. If you have any investment questions, feel free to leave a comment. If I don't have time to address your questions today, I'll cover them in tomorrow's class. After the Federal Reserve's interest rate decision at 2 a.m. today, the whole market has been in an uproar, with significant volatility, and of course, this has carried over into tonight's trading session, which is also seeing a lot of fluctuations. Especially just now, at 7 p.m., there was some breaking news. A $5 billion investment is about to be made in Intel. So, in a moment, we'll analyze this news for everyone. Since it just broke at 7 p.m., NVIDIA is investing in Intel. We'll discuss what kind of impact this might have, and how the two companies might form a strategic alliance. I'll provide more details on that shortly. Now, as for today's most important investment focus, of course, I want to share with you the Federal Reserve's monetary policy, which was announced early this morning. What key points did they mention? And what major impact might this have on the current U.S. stock market or the overall economy? Why do I say that this rate decision is considered a mild dovish move, but not an aggressively dovish one? But regardless of whether it's mildly dovish or aggressively dovish, as we've discussed before, as long as monetary policy leans toward easing or is dovish, it's generally interpreted as positive and favorable for the stock market. In addition, in this segment about the double standards, I'll also talk a bit about the Federal Reserve Board member, Cook, this time. Wasn't Cook almost replaced? There are also some related issues regarding Besant in the progress of the lawsuit. We have previously discussed concerns about double standards. Will these concerns have any impact or problems on this lawsuit against Cook? So, whether it is in October or December, will Cook be replaced? Will this be beneficial for Trump to immediately install his own people? I will also provide you with relevant explanations today. In addition to the news about NVIDIA, Land Rover, and Intel that I just told you about, there is also a hidden concern about wafer. This concern is closely related to the Chinese market. As we know, Trump has been repeatedly demanding that high-tech companies such as wafer and AMD or AI chips be banned from exporting to China to prevent China's AI with continued development, under the circumstances of export controls. Of course, there has been constant coordination. The Sino-US trade war is also slowly being negotiated. Originally, Weda had the opportunity to resend the special H20 chips originally sold to China. However, there are now small concerns. Will this concern cause instability in Weda's market share in China? Special attention should be paid. In addition, there is other news in the industry. Apple and Meta have recently been continuously launching new products. Will these new products gradually have a warming effect on their revenue and profits? If you hold related stocks, at what stage do they have room to continue to rise? The above is part of the part that I will comment on one by one in today's Group Good Night program. Good evening, everyone. Good morning, everyone. Good evening. Tonight, we have SHAS, this poem, Faye's language, Ying, Mei, and Dai Zi. Hello, Min Alice Fu, Jane, Jefflin, He Wu, and Anna, good evening. Berwin Chen, Perwei Lu, hello. Someone said, luckily, it wasn't TSMC that acquired Intel. Intel is a hot potato, a mess. Whoever takes it over is unlucky. So, TSMC not taking it over was good for TSMC. That's why TSMC's stock price keeps hitting new highs. But today, NVIDIA says it wants to invest in Intel. Why? Is this mess something they're taking on willingly or being forced into it? I think the reason for being forced into it is big. I'll explain why in a bit. The reason for being forced into it is big. Will its stock or revenue be impacted? NVIDIA's pre-market Intel acquisition led to a surge in Intel stock. That's understandable. But why did NVIDIA's stock also soar, while TSMC, which wasn't involved, actually dropped? Many reasons exist, and I'll explain them to everyone shortly. Anyway, good evening to everyone, including Melissa Chung. No matter what everyone thinks, for those who didn't buy Intel in the past couple of days, it's okay, because today it surged by 30% in one go. It's not really the right time to chase it now. So, what should you do next? I'll talk a bit about Intel's future developments in tonight's and tomorrow's evening shows. First, let's take a look at the economic data. At 2 a.m. today, besides the Fed's interest rate decision, the Bank of England also announced its rate decision at 7 p.m. As expected, the rate was kept unchanged at 4%. Overall, the impact isn't significant, but the Fed's interest rate decision was in line with market expectations, a quarter-point cut, bringing the rate to a range of 4% to 4.25%. We'll look at the weekly U.S. initial and continuing jobless claims. Initial claims was 263,000, with expectations at 240,000. Continuing claims was 1,939,000, with expectations at 1,950,000. Initial and continuing claims have stayed within a manageable range. The number spikes to 250,000 or 260,000, but in previous weeks, it's generally hovered around 220,000 to 230,000. As tariffs are imposed, companies may not hire as many people, or there could even be some companies laying off employees. This will cause the number of initial and continuing jobless claims to gradually and slightly increase over time. However, regarding the overall job market, we can only say that it is currently tending to cool down and slow down. However, we haven't seen a major collapse or even the unemployment rate reaching 4.5% or above 5%. However, the short-term initial employment figures are slightly adjusting or rising. This trend exists, but it has not yet gotten out of control. This cooling of the job market is actually a huge obstacle for the Federal Reserve to cut interest rates this time. I will talk to you later because the related discussions are about unemployment benefits and inflation. What is the Fed's view on this? In addition to the initial and subsequent employment figures, the Philadelphia Fed Manufacturing Index for September will also be released at 8:30. Good evening, domestic time. The previous value was negative 0.3, so the forecast is. The outlook is for a slight rise of 2.5%, but this data actually has little impact on the U.S. stock market and can be viewed neutrally. At 10 o'clock this evening, there was a U.S. Chamber of Commerce leading monthly rate for August. The previous value and the expected value were both negative 0.1%. Whether it is the Philadelphia Fed Manufacturing Index just mentioned or the 10 o'clock leading monthly rate, this data is generally viewed neutrally. The more important data tonight will be the number of initial and continuing unemployment benefits. Okay, let's review what important information was mentioned in the interest rate decision at 2 o'clock this morning. Because if you catch this important information and grasp the relevant key points and match it with the 5 key points we talked about yesterday, you will roughly know what will happen next. When it comes to quarter 4, is the U.S. stock market more likely to go up or down? Conclusion first, market up chances are higher. History shows U.S. stocks usually rise in Q4. Also, the latest interest rate decision had more dovish, or accommodative, arguments. A dovish stance is generally positive for the U.S. stock market. Details: the September interest rate meeting was held last night and into this morning, with an 11-to-1 vote. The rate was cut by 0.25%, bringing it to 4% to 4.25%. The one person who voted against was the new member, Lishiman. But he wasn't against cutting rates, he was against the rate cut being too small. He preferred a bigger cut, like 2 rate cuts instead of 1. In fact, he hopes that the total rate cuts for this year could reach 150 basis points, which means a 1.5% reduction for the whole year. So, from 4%, that would bring the rate down to around 3%. Although the chances of this happening are extremely low, almost impossible, there is a more realistic chance of 2 or 3 rate cuts this year. If each cut is about 0.25%, then 2 cuts would mean a total reduction of about 0.5%. If there are 3 rate cuts, that's a 0.75% reduction. 2 to 3 cuts are still within a controllable and expected range. The vote went this way. He is still leaning dovish, and of course, what's really important is that in this statement, it was mentioned that the current job market is showing increased downside risks. The economy has slowed down in the first half of this year, and inflation is slightly higher. At this relatively high level, this was mentioned in the statement. Another very important point is the Fed's economic forecasts, including the dot plot, and even projections for GDP, unemployment rate, interest rate levels, or core PCE inflation. Every March, June, September, and December, they release these crucial economic forecast charts. The dot plot is also officially announced during these months. This time, the dot plot suggests that there will be a total of 3 rate cuts this year. Back in June, we mentioned to everyone that the dot plot at that time projected 2 rate cuts this year and 1 rate cut next year. This time, the current dot plot projection has added 1 more rate cut, which means the overall committee has become a bit more dovish in their stance. She hopes for a 1.5% rate cut this year, but I think we can just take note of it, since I don't think the chances of that happening are very high overall. Looking at the overall picture, this time's quarter-point rate cut matches market expectations. Whether it's a 1 or 2 rate cut, whether it happens in October or December, we can't say for sure right now. But the direction and likelihood of a rate cut are both relatively high. Just remember this, whether it's in September, October, or December, whether there are 2 or 3 rate cuts, overall, it's positive for the US stock market and for the liquidity in the market. So keep that in mind. Now, as for the 3 rate cuts this year, this part is special. 2 rate cuts, now raised to 3. In this chart, red sections represent increases, green background indicates decreases. GDP forecast for US from 2025 to 2028 has been revised upward. 2025's forecast raised from 1.4% to 1.6%, next year from 1.6% to 1.8%, and for 2027, from 1.8% to 1.9%. Unemployment rate unchanged this year, but for the next 2 years, slightly lowered by 0.1 percentage points. Inflation this year unchanged, staying around 3% to 3.1%. Next year, it's to rise from 2.4% to 2.6%. This is due to the ongoing tariff war, accelerating inflation. The interest rate forecast this year is to drop from 3.9% to 3.6%. Next year, it's expected to drop from 3.6% to 3.4%, and the year after that, it will reach 3.1%. Overall, the projected interest rate levels are even lower than those from June of this year. This means that the Fed's committee members are expecting a more accommodative monetary policy, with a greater extent of rate cuts. So, to sum up these data changes, GDP is going up, inflation will rise slightly next year, the unemployment rate is going down, and interest rates are actually all trending downward. This is a summary for everyone regarding the interest rate levels. Next, regarding the dot plot, yesterday, I remember a student, I think it was at the end of the show, asked, "Good evening, Mr. Hong, how should we actually read the dot plot?" It's actually very simple. Each dot on the dot plot represents a committee member's forecast for where they think the interest rate will be in the coming years, like 2025, 2026, 2027, 2028, or the long-term rate. Every single dot stands for one committee member. So, for the current Federal Reserve, regardless of whether the members have voting rights or not, there are about 19 members. That means there are 19 blue dots in total. As for the interest rate levels, like this year's forecast of 3.6, next year's 3.4, and 2027's 3.1, how are these numbers determined? They come from looking at which range most committee members expect or hope the rate will fall into. For example, in 2025, the majority of members, maybe 8 or 9 or more, are forecasting 3.6. For 2026, the median is where most forecasts cluster. It falls to 3.4% in 2026 and 3.1% in 2027. The most clustered dots indicate the forecasted value, showing which range has the most dots. If the majority isn't clear from dots, check the table. The table makes it clear. This year it's 3.6%, next year 3.4%, and the year after that 3.1%. So you really need to know how to read the dot plot. Of course, what's more interesting is the one for 2025. In the 2025 dot plot, there are 19 dots, right? Did you notice there's a dot way down below 3%? That means someone is forecasting that the Fed's interest rate will drop below 3% this year. But there are only 3 months left in the year, 1 more meeting in October and 2 more in December. They're saying the current rate, which is between 4% and 4.25%, will drop to below 3%, at least a 1% to 1.5% cut. So you might wonder, with such a big gap, who wants the rate to fall below 3%? People are guessing that this little div, which is kind of an outlier, belongs to Milan, the new member, because he supports a rate at the 3% level. So from the distribution of the dots, you can pretty much tell where most committee members think the neutral rate will be, and where they expect future rates to go. Important to make judgments based on officials' projections, including dot plot, interest rate levels, and GDP forecasts. Powell's remarks are important. In his speech, Powell said the economy is responding, consumer spending is moderating, the economy is slowing down, and the labor market is cooling off. There are a few other key points I want to mention. For the text part, you can just take a quick look. He said that the inflation we're seeing now is driven by tariffs. He reiterated that this is still considered more of a temporary and one-off reaction. Inflation will continue to rise this year and next year, but this increase might just be a one-time shock caused by the impact of tariffs. Another important factor is the labor market. He believes that the labor market is currently continuing to cool down, and because of this cooling, the Fed needs to take some precautionary risk management measures by cutting interest rates. He thinks that this rate cut is not meant to signal that after today's cut. It's not that there will be continuous and rapid rate cuts tomorrow, the day after, or even in the coming months. That's not the case. What he's clarifying to everyone is that this rate cut in September is simply because the job market has cooled off more than expected, which has caused concern, so he's taking action. It's a risk management type of rate cut. So, it's not that starting in September, they're going to start cutting rates very quickly. No, that's not the case. That's why, as I mentioned earlier in the investment focus, today's Fed rate decision is more of a neutral dovish stance, and it's a mild dovishness, not an aggressive or urgent dovishness. The reason it's not a super dove, but a mild dove, is because Powell said so. Today's rate cut is more about risk management. Why? To help stabilize the job market a bit, so it doesn't fluctuate too much, but also not to cut rates too aggressively. In addition, he mentioned that the forecast for the PCE or the core PCE annual rate, which will likely be released at the end of this month for August, is expected to be around 2.9%. In addition, the current rate of inflation for goods is rising more sharply than that of the service sector. Finally, he specifically mentioned that while tariffs are indeed being passed on to consumers, the impact and extent of this pass-through are not as high as people might have imagined. What does this mean? It means that inflation is still on the rise, but it hasn't reached an extremely exaggerated level. In other words, going forward. No matter if it's August, because he just mentioned that the latest annualized core PCE for August might fall at 2.9%, so it hasn't surged to 3%. Whether it's 2.9%, 3%, or even 3.1%, in fact, since the data for May, June, July, and August has been released, it's all stayed within a relatively stable range and hasn't shot up above 3.5%, so it's still okay. So, he said that while tariffs have been passed on to consumers, the impact on prices is relatively. Their estimates suggest the impact is relatively small. After tariffs, the overall effect on core PCE will be about 0.3 to 0.4%. Remember this number, 0.3 to 0.4%. You might say, why remember this, teacher? Why is it important? Because it's crucial, it will serve as an anchor. What do I mean? Powell said that once these tariffs are implemented, the core PCE will increase by 3 to 4. And didn't he just say that the core PCE annual rate for August was 2.9%? So, in other words, let's round it up. Let's just say 3%, because recently the core PCE annual rate has been fluctuating between 2.9% and 3.1%, just moving up and down in that range. I'll take the midpoint, 3%. So if you add 0.3% to 0.4% to 3%, what do you get? That's 3.3% to 3.4%. In other words, what he's telling everyone is that after the tariff war really kicks in, since at this stage the cost passed on to consumers hasn't pushed prices up as much as people imagined, and the impact might be temporary or short-lived, so if you add this contribution of 0.3% to 0.4%, in other words, if tariffs are really implemented, the future core PCE annual rate could end up at 3.3% to 3.4%. In other words, if inflation pushes past 3.4% or even moves toward 3.5% and above, that's when it means inflation is getting out of control. Let me say it, Powell has already given everyone a benchmark number. He said this round of tariffs might contribute 0.3 to 0.4 to core PCE. So if we take the current average level of core PCE, which is 3%, and add 0.3 to 0.4, with the tariffs in place, it would fall in the 3.3% to 3.4% range. All of this is within the Fed's acceptable range for inflation, because they've already set that benchmark. So, if you see the annual rate of core PCE shoot up to 3.4% or even 3.5% and above, that's when you should start worrying. There's time. Understand. As long as it hasn't crossed that benchmark, inflation isn't out of control. Not out of control, does Fed need to keep rates unchanged or hike again? No. Keep this benchmark in mind. Fed's latest statements are neutral to dovish. The overall stock market is still relatively positive. As for this Besant story, just read it and treat it as a double standard joke. Besant once bought 2 houses and registered them for different reasons. He also claimed they were primary residences, but in fact, they might not be. This is the same reason why Trump sued Cook this time. He accused Cook of buying 2 houses and registering both as primary residences, but in fact, one was rented out, which is a bit like the concept of immortal registration. Anyway, loan experts and Besant's lawyers said that they would not comment on the positions of these 2 people. Anyway, it's a bit like saying, this is called, officials are allowed to set fires, but ordinary people are not allowed to light lamps. Anyway, if Trump wants to replace you as a Federal Reserve governor, I will find all kinds of reasons and excuses. For example, when he wanted to replace Powell, he would find some of these things to say, such as, hey, Powell, you spent billions of dollars renovating the Federal Reserve building. It's too much. There are problems with this project. The expenses must be too high, so I want to replace you. He will find such things to replace someone he doesn't like, so he will find reasons to deal with you. So, what will happen next? The next interest rate decision will be in late October, or the next one in mid-December. There will be 2 more by the end of the year. As for whether Cook will be replaced as a Fed governor, I think it's still too early to say. It's still uncertain at this point, because according to the current court ruling, it seems like Cook is not guilty and there are no concerns about any kind of fraud. Right now, there aren't any issues. But will Trump look for all kinds of reasons to target Cook or other board members and try to interfere? I think he probably will. So we'll just have to see. We'll track what major events unfold in October, but it's conceivable that Trump will do a lot to ensure he has his people on the Fed, so just take note of this. let's take a look at this. I don't know what was popular in the past, the white paper, the blue paper, and the white paper. Recently, dot plots are popular. I'm telling you, the books and white papers you just mentioned are more important. The economic situation and the white paper are very important. Before every interest rate meeting, we usually announce the economic conditions of 12 key regions in each state, including information on prices and investment. We've mentioned this before, so it's more important than the white paper. Why bother with the other white papers or blue papers? The key charts are also crucial. We'll definitely be tracking charts 369 and 12 in December, so everyone should review everything. However, due to time constraints, we can't cover each one in detail. We can only highlight the key points. Just looking at the key points, we spent almost an hour on the topic. Wow, that's impressive. Whitey said, is the data released at 8:30 important? Only one thing is important, the number of initial and temporary claims. I'll talk about that later. At around 8:30, that data relatively important. 10-year public practice rate holding 4%, terminal rate 3.63. 2 opportunities this year, 2 chances. Maybe October or December, we'll see if there be a rate cut. Before year-end, number of rate cuts reduced to 1.8 times. Reduced to 2 times, interesting. I mentioned beginning. Today's rate decision is considered moderately dovish, not an aggressive or urgent dovish move. Why? You can see this from the number of expected rate cuts. As of yesterday, it was 2.72 times. Some predicted nearly 3 times, but after the meeting, it was clear there would only be 2 rate cuts this year. As I mentioned, there are many details, because Powell said the September rate cut is more of a risk management move. So, will there be a cut in October? Personally, we think the chance of a cut in October is not high, but there's still a chance for a cut in December. So, looking at the whole year, it's reasonable to expect about 2 rate cuts. At most, it might be 2 to 3 times, but 2 is more likely. 3 times, because there are only 2 meetings left, October and December. So, no matter what, rate cuts overall are good for the stock market. Of course, since rate cuts tend to suppress the US dollar, they're not good for the dollar. That's why, during yesterday's session, the dollar once dropped below 96, fluctuated there, and then rebounded back up to 97. Today, it rose slightly by 0.12%, but in the short term, it's still relatively weak. As for geopolitical risks, the EU is putting pressure on Israel and taking some sanction measures. Actually, this news was already mentioned last night on the Good Night program, including things like suspending some trade with Israel or sanctioning 2 more extreme ministers, namely, the Ministers of National Security and Finance. They even imposed sanctions on 10 Hamas members. But are these sanctions really that important? Personally, I think these sanctions and pressure don't really matter much and aren't very effective. So you might say, the EU has taken action, put pressure on Israel, and also pressured Hamas. Doesn't that mean Israel and Hamas probably won't fight anymore? Shouldn't it be over? Israel won't stop attacking Hamas, and ground troops in Gaza won't be pulled back yet. It's not happening quickly. Why? Because these sanctions and actions, here's the key, they still need EU member state approval. Even after approval, it takes 30 days to go into effect. There are 2 reasons. The EU has 27 member countries. Whether it requires majority or unanimous approval, all 27 countries must pass it before you can implement it. Getting everyone to agree is extremely difficult, almost impossible. Even if a majority agrees, unanimous consent is needed, which won't happen. After agreement, there's a 30-day waiting period. So, by the time voting, implementation, and action occur, it could easily be 3 months or even half a year later. By then, Israel might have taken over Gaza. What would you sanction then? There'd be nothing left. Hamas might be gone, hostages exchanged, and then Israel has already taken over Gaza. Imposing sanctions now seems ineffective, so just following the news should suffice. Low-cost risks are currently low, not yet surging. Oil prices are similar, remaining relatively weak at 0.55%, continuing to fall today. Don't forget, Trump still hopes for lower oil prices. Besides the Fed's interest rate decision this morning, the Bank of England's decision was also announced at 7 p.m., keeping rates unchanged at 4%. The U.S. weekly Philadelphia Fed Manufacturing Index and the 10 p.m. Investor Relations Index should be prioritized, as tomorrow's data will be less important if only observed. Tomorrow morning, at most, there will be the Bank of Japan's interest rate decision. Quickly check if Japan's core CPI annual rate for August will rise or fall. If CPI rises, it may favor a rate hike. If core CPI inflation continues to decline, we might see positive news in the Bank of Japan's interest rate decision. It's impossible for the Bank of Japan's interest rate to remain unchanged. The Bank of Japan's actions differ from other central banks. Other countries, including the European Central Bank, Bank of England, US Federal Reserve, and even Canada, Australia, and New Zealand, are all cutting interest rates. Taiwan didn't cut rates, nor did it follow suit. This time, I remember Taiwan not following suit. Almost the entire world is cutting interest rates, but only one country is raising them. Excluding Argentina or other countries, let's consider the most important ones, like the G7. Japan is more contrarian, intending to raise interest rates, making it a bit different. But overall, I think there's a higher probability the Bank of Japan will keep interest rates unchanged tomorrow. For financial reports, we might look at FedEx tomorrow, Micron next week, Costco, Carnival, and Nike. The second wave of third-quarter earnings won't be until mid-October. Financial stocks will lead, with earnings in mid-October, which we'll show you later. Okay, let's look at some industries in the financial reports. First, let's talk about Hueda. Of course, there's a huge piece of news today. Just now at 7 o'clock, Nvidia announced that it will take a stake in Intel. We mentioned this right at the start of the show, the very latest news just after 7, and it caused quite a stir in the market. Nvidia spent $5 billion to buy into Intel. So, is this good or bad for Intel? Of course, it's good for Intel. But is it good for Nvidia? I'll talk more about that in a moment. Before we talk about whether this is good for Nvidia, let's first discuss Nvidia's concerns. Let's get the bad news out of the way first. What are Nvidia's worries? Even before today's investment, which isn't really a merger or acquisition, just an investment in Intel, Nvidia already faced some significant negative news. In fact, this negative news has been circulating for quite some time, but today the Financial Times in the UK specifically reported that Chinese regulators have already instructed some of their major tech companies, like Alibaba, Baidu, and others such as Lacostoco, not to buy Nvidia chips anymore. In fact, all current orders have been cancelled, including those from companies like ByteDance, yes, TikTok's parent company, Alibaba, and others. All the special edition chips that Nvidia sells to China, called the RTX Pro 6000, have had their orders cancelled. Of course, Jensen Huang expressed his disappointment, but all he can do now is wait patiently. Also, both Alibaba and Baidu reiterated today that they will increase their procurement and use of domestically produced computing chips, and are prepared in case the US stops selling chips to China. They already have all the necessary countermeasures in place. Maybe they'll use Huawei, DeepSeek, or something else. Anyway, they're already getting prepared. So in other words, the concern is that under Trump's export controls, Nvidia originally could not sell the H20 chip. Later, they tried to modify it, coming up with something called the BA30 chip, and then another one, the Spolo 6000, which was a custom order chip still in testing. They were really confident and excited, hoping to replace the H20 and sell it to China. At that time, Trump, I remember it was last week or maybe a few weeks ago, specifically said he would relax the rules and allow Nvidia and AMD to sell the H20 chip to China again, as long as 15% of the revenue was paid to the national treasury. Everything was agreed upon, all the terms were set. But after all that, when it came time for China to buy, they said they might not even want the chips anymore. So the concern is, if these large Chinese companies gradually switch to only using their own domestic chips and stop using NVIDIA's, maybe for national security reasons or because they want to promote their own domestic products and technologies, and stop using NVIDIA or AMD chips, then to some extent NVIDIA and AMD's market share in China will definitely take a significant hit. Of course, in the short term, there will be a lot of noise and rumors about this, but of course, we have to say that NVIDIA's or AMD's chips are definitely, to some extent, more advanced or more user-friendly than Chinese chips. More advanced or easier to use. If Chinese tech companies really do completely stop using NVIDIA chips, I think that would be a negative for NVIDIA itself. And that negative impact wouldn't just be a short-term disturbance. It would be significant if they truly stopped using them. In the long run, this might not be a good thing for NVIDIA, so everyone needs to be especially cautious and pay close attention. NVIDIA's stock price dropped again yesterday, falling 2.6%, and it slipped back below the moving average. So, for now, be a bit more cautious with NVIDIA's stock price. Of course, NVIDIA's fundamentals aren't facing any major issues, but as we just mentioned, the concern is about the Chinese market. Previously, Jensen Huang said that the market opportunity in China is at least $15 billion, possibly even higher. If NVIDIA really can't gain any ground in the Chinese market, or if its revenue declines due to restrictions from China's regulatory authorities, then this could impact its revenue and profits to some extent, and you need to be especially cautious about its stock performance. After all, NVIDIA's stock price is at a high point right now, but it hasn't surpassed its previous high, and the lows keep getting lower. So pay a bit more attention. Recently, the high hasn't broken through, and as for the low, will it break lower? For now, it doesn't look like it because the pre-market price today is still up, right? So just keep an eye on it for the next week or two. If the low does break lower, that means NVIDIA's extended rally will enter a longer consolidation period. But if the previous low doesn't get broken, then there's no need to worry too much. It just means the stock will move sideways, which is fine and not a sign of a major crisis. So simply treat the previous low as an important turning point. That's the first point. The second piece of news is what we just mentioned, NVIDIA's investment in Intel. It's a $5 billion investment at about $23.28 per share, and the stake is less than 5%. So, how will the two companies cooperate? They'll work together to design chips for PCs and data centers. Of course, this news is a huge boost for Intel. Previously, everyone, including Trump, hoped countries or companies would support Intel to save it. But TSMC definitely wasn't going to, and NVIDIA, AMD, and others just watched. Now, with this news of a $5 billion investment in Intel, honestly, it's not a huge stake or many shares. But as always, some people know these things ahead of time. If the government acquired Intel, the cost would only be a little over $20 per share. NVIDIA's investment in Intel is at $23 per share. So what was the stock price then? Yesterday, Intel's stock price was already close to $245. Over $245. So, how could people not know in advance? Of course, some bought in early. Today, in pre-market trading, the stock price soared again, jumping to $30 or $32 per share. In pre-market, it went up nearly 28%. A lot. In the future, whether it's Intel in the PC space or anything related to NVIDIA, like PC chips, they'll just keep communicating, collaborating, and working together on follow-up projects. Of course, this is a good thing for Intel. But coming back to whether this is actually good for NVIDIA, personally, I think, or rather, we think that what's good for NVIDIA isn't really about chip collaboration or anything like that. RTS or similar tech isn't a big deal for NVIDIA. Those things aren't important to them. Honestly, NVIDIA might not even care much about Intel's chips or tech, because NVIDIA's own tech might be more advanced, especially for AI products and other offerings. So why is NVIDIA's stock rising? You might say, teacher, they just took on a hot potato, so why is the stock going up? It's actually very simple. It all comes down to one thing. He's giving Trump face. He's giving Trump face even though he's taken on a hot potato. For Trump, it's simple. In Trump's mind, he's probably thinking, I want to save our country's biggest chip maker, Intel, because Intel is doing terribly, No one wants to save them, right? They're about to go under, about to go bankrupt, and still no one wants to help. So what can I do? I have to find the most profitable company to bail them out. And who is that? NVIDIA, with a market cap of $4 trillion, the highest in the US, now up to $4.2 trillion. NVIDIA has the most money, so who else would you ask? Of course, you ask Jensen Huang to help. If you don't ask NVIDIA, who else is going to do it? So he asks NVIDIA to step in. And does NVIDIA want to give face? Of course, they have to give face. So they invest about $5 billion and get less than a 5% stake. Since they're giving Trump face, what's the benefit for NVIDIA? The benefit is kind of like the concept behind the trade war. During the trade war, didn't Trump say that as long as each country or company invests in the US, expands production, and cooperates strategically, even opening up markets, then he wouldn't impose tariffs on that industry or company. There's a chance for exemption. So with a major investment, who's making these massive investments? Companies like TSMC and Apple. TSMC invested $165 billion, and Apple has invested nearly $500 to $600 billion over the past 4 years. A huge amount. Compared to that, NVIDIA doesn't seem to have invested that much. They haven't really done much, just talked about it. So now, what's the situation? So he has to take some action. He's making moves. After all, he and Trump visited the 3 major Middle Eastern countries, and then they went to the UK for some strategic cooperation. Under these circumstances, wherever Trump visits, whether it's about tariffs or AI collaboration, he always brings 2 companies along. Both companies follow him everywhere. One is Boeing, which we talked about yesterday. Boeing always tags along because of aircraft and defense contracts. The other is the big player in AI, NVIDIA. If not NVIDIA, then who else would he bring? If not NVIDIA, it's AMD. If not AMD, it's NVIDIA. If not, it's Coldweaver. So NVIDIA is inseparable from Trump now. In this situation, if Trump orders, help our biggest domestic company, Intel, will NVIDIA help? Yes, they will. So what does help mean? It means in the future, it's possible NVIDIA will be given a free hand in chip exports or regulations. So they spent $5 billion to buy another exemption ticket. So looking at the US and Russian stock markets, why did NVIDIA stock keep rising before the market opened, even though it was a hot potato? It's just like I said, they're giving Trump face, and in return, Trump will give them even more leeway to let things slide. So with more room for exemptions, let's look at it from another angle. NVIDIA is giving Trump face, right? NVIDIA is giving Trump face, right? Now here's the key point. Who isn't giving Trump face? Who? Those companies will be singled out. For example, TSMC. They're not merging, right? AMD isn't merging, right? Which companies aren't willing to take on this hot potato? So the reason these company stocks drop before the market opens is basically this concept. It's a kind of ideological market atmosphere, that vibe. That's why before the US stock market opens, NVIDIA and AMD, these so-called bad companies like Intel go up, and there's a reason. Besides the possibility that their products have synergy. Since they cooperate, their products have synergy, and it's inevitable they form strategic alliances. It helps their company's revenue. Ideologically, it gives Trump some face. In the future, when it comes to making policies or getting exemptions, I think the chances will be higher. Trump is very clear about who he likes and dislikes, so NVIDIA and Jensen Huang giving him face, to some extent, is a good thing. Regarding Intel's stock price, over the past month or two, it's been consolidating around 22 to 25, and today it just gapped up. For the past, let's wait and see what happens tomorrow and talk about changes then. We'll keep an eye on it. Alright, this can be considered a kind of political economics, I guess. When it comes to politics and business, honestly, these two sectors can't be completely separated. After all, business people need certain political policies to operate. Politics often involves businessmen sponsoring things, a mutual benefit if successful or collusion if not. The level of political and economic activity is crucial, not for ordinary people. If someone enjoys it, they can participate. Let's review today's news. The economic data released at 8:30 shows the U.S. job market is stable. The number of people traveling dropped to 231,000, lower than expected and previous values. Epidemic infections also decreased to 1.92 million, also lower than before. This indicates the job market hasn't collapsed. With stable employment data, interest rate cuts in October and December are possible, which is favorable for the U.S. The Philadelphia Fed Manufacturing Index at 23.2 is higher than expected and previous values. Overall, recession concerns are greatly reduced. The economy is not heading towards recession. The job market is cooling down. It hasn't collapsed. So looking at the U.S. stock market today, it's relatively optimistic. Of course, this optimism and positivity come after the major volatility caused by the uncertainty from the Federal Reserve at 2 a.m. today. The U.S. stock market is gradually returning to a normal trajectory over the next month, which is still more of a bullish trend. The principle for a bullish trend remains the same. Buy on dips and sell on highs, buy low and sell high, buy low and sell high. Facing this market that keeps hitting new highs, I think this is a safer approach. Let me also mention Apple and Meta. As for Apple's iPhone 17, as I mentioned before, these products will be released one after another. Many investment institutions, I think, will continue to upgrade their ratings for Apple. Starting from mid-September, Apple will begin pre-orders, with pre-orders on September 12th, and then releases on September 18th and 19th. The impact will gradually build up, as we've discussed, over about 2 months until mid-November. Whether it's the iPhone 17 standard version, Pro, Pro Max, or the Air, the thinnest and latest model, or whichever generation of AirPods, after all these products are launched, let them ferment for about 2 months. This time, the market's response to these new products seems to be quite positive. Overall, the reviews are pretty favorable. So, it's expected that after this 2-month fermentation period, probably after mid-November, Apple's stock price should still have a chance to keep climbing higher. You can keep an eye on it, but just know that Apple's stock price tends to move slowly and steadily. It's not like Tesla or Google, which can skyrocket, or like Intel and other companies. No, Apple will go up for 3 days, then maybe pull back for a day, then go up again. Up for 3 days, then a pullback for a day, slowly inching up, setting new highs. It won't hit the daily limit, but it just keeps rising, slowly fluctuating. Maybe you'll have to wait a while. Only after 2 months, when you look at it again, will you know which direction the trend might be heading. So, its stock character is relatively sluggish. In the short term, as long as the 50-day and 200-day moving averages haven't been broken. But when it really starts to perform, that's when the stock price could really start to move higher. That's Apple. Also, an update on Meta. Meta just launched new smart glasses today, the Ray-Ban solar-powered smart glasses with a display, priced at $799. These glasses are basically smart glasses similar to Xiaomi's. The biggest difference is a built-in little screen on the right side of the frame. Honestly, I don't know about having a tiny screen right there. If you keep looking at it every day, staring at it, will it worsen nearsightedness? I don't know. Maybe the projection technology doesn't affect eyesight. I have no idea what tech they're using. But I just feel like, with something that close to your eyes, staring at it all the time. Normally, when we use electronic devices, we keep them far away, right? To reduce blue light exposure. Blue light impacts macular degeneration. If you wear smart glasses with a tiny screen close to your eyes, the long-term vision effects are unknown. But in the future, this trend is unavoidable. This new product has many features. It offers messaging, video calls, navigation, and photos. Like Mission Impossible, where Tom Cruise's glasses self-destruct after he views Intel. They just burn up and self-destruct. And Tom Cruise's glasses have all kinds of features, right? You see all sorts of things with them. Some of the features are like weapons, some are for navigation, some are for gathering intel, things like that. Now, this thing has basically been made real. With these glasses, you can do all sorts of AI functions. Like we just mentioned, you can navigate, use voice commands, have conversations, do video calls, and even get real-time translation. If a foreigner is talking to you, blah blah blah, you get an instant translation right in your ear because the glasses have audio features. They also have video and image functions, so you know exactly what the foreigner is saying, and the translation appears crystal clear in your view. But here's the thing, when it translates everything into Chinese and you understand it perfectly, if your English isn't good, you still can't reply. Like, after he finishes talking, you need to respond, but what do? You can't expect him to speak Chinese, and if your English isn't good, what then? You end up speechless. You just can't say anything, so does this real-time translation actually work? It does, but the premise is that both people need to have a pair of these Meta smart glasses. If both people have a pair, then you can communicate with each other during a conversation. Otherwise, if it's just translating what the foreigner is saying, after it's translated, you still can't reply because your English isn't good. Do you get what I mean? So this thing will only really work when it becomes more and more common, when everyone has a pair. Maybe in the future, the technology will get smaller and smaller and just be built into glasses. Eventually, we won't need any translators or translation devices at all. Besides that, what other new features does it have? For example, it's added an air writing function. It's launching on September 30th. So keep an eye on it. Right now, Meta's smart glasses have the highest market share overall. For example, the Ray-Ban model has a really high market share. It's as high as 78%, so that's really impressive. That's why I think when the new generation of smart glasses goes on sale on September 30th, it'll probably sell really well too. It has a small screen right here, and it also comes with a new kind of wristband that you wear on your hand, this black one. You can see in the photo what the new glasses look like. And the wristband on your wrist, what's it for? It's not for measuring your blood pressure or your heart rate. That's what the Apple Watch does. This wristband works together with the glasses, so when you move your fingers, like swiping or tapping, it syncs with the small screen on the lens of the glasses. That little screen has function keys, so you can swipe left or right to execute, confirm, cancel, or do searches, all through finger gestures. So however you swipe the lens or interact with the smart glasses screen, it's all done through the new wristband and finger movements. This technology is honestly hard to imagine. It's amazing that something like this even exists. Anyway, I think the launch on September 30th will probably go really well, because it's expected to go on sale then. As for Meta stock price, just watch this neckline here, which is around the 50-day moving average. As long as it doesn't fall below that, there shouldn't be any major concerns. That's the update on Meta. Okay, moving on. Amber with a face full of labels and see-through features. Anyway, I don't know how to respond to that. Who knows, maybe we're about the same age. He was talking about how people on Earth transform into scions. Who was that again? CXPI, good evening. Someone else said it would make you cross-eyed. Also, good evening to Fanhua. And who was the one writing in English and Japanese? I'm not good at Japanese. I really don't know how to translate it. For example, if I had these smart glasses right now and I saw classmates leaving comments, some in Japanese, some in English, I could just look and instantly get a translation and I'd know what they were saying. What did he write? It was something like that. And just now, talking about the scion evolution process, everyone knows if you're about my age, you probably watched Dragon Ball. Dragon Ball was really famous back in the day, the manga. And remember those glasses? The single lens glasses, the frame, when you put them on, you could see the power level of everyone you were fighting. If their power level was really high, you'd better run, because you couldn't beat them. If their power level was low, you could just treat them like ants, like cannon fodder. That's basically the idea. So if you've seen that scene from Dragon Ball, you know there's a lens in there. It had a little frame that would display each person's power level. In the future, I think Meta's glasses will show all kinds of information, AI data, navigation info, voice information, and whatever you want to do, like conversations. So you might ask, is it possible in the future to have truly seamless two-way translation? In fact, it has been developed. Now, China or other countries have already developed this technology. When they go to order food and buy things with foreigners, they talk while watching the video. You may not understand what the foreigner says, right? But his translation glasses will directly translate it into Chinese for you to listen to. After that, you say in Chinese that you may want to order dishes, such as hamburgers or something. Then the glasses will directly broadcast the voice and translate it into English so that the foreign waiter on the other side can directly know what you want to order. So this is what Neo does. That is to say, the waiter does not need to wear these glasses. He can directly know what you want to order. Now this technology already exists, but whether it has been popularized and mass-produced is another matter. That's right, okay, so this is in the meta section. Pay attention to the new smart glasses coming out on September 30th. You don't need to worry about the headband. What's that VR headband? They're cold, no one knows how to use them, they're heavy, and no one wears them anymore. Now, people wear these smart glasses, Xiaomi glasses, right? Meta glasses, solar glasses, they're so cool, so powerful, and they have so many functions. As for the headband, the helmet, and the device, I'm telling you, no one wears those. It's too heavy, consumes too much battery, is inconvenient to carry, and is not easy to wear. If you wear a helmet and walk on the street, people will think you are crazy. So if you wear a helmet and then laugh and play VR games on the street, people will think you have hurt yourself or something. So this VR head-mounted helmet is too heavy, weird, and inconvenient. But in the future, this kind of glasses-like see-through and lightweight thing will definitely be popular. It will definitely become popular, just wait and see. I think it's something very easy to popularize. Combined with your phone and smart band, you'll have many functions. You can perform many tasks through gestures. Alright, one last thing. Wow, it's already 50 minutes, bad. Take a look at this news. This company, Lyft, Uber's competitor. Lyft has about a 30% market share in the US, the second largest ride-hailing system after Uber. So who are they partnering with? They're working with Google's Waymo. As of now, Waymo is considered the largest, most widespread, and most competitive self-driving taxi company. Not Tesla. Tesla is still in early development. Currently, the more widely used and available service in many cities is Google's Waymo, a self-driving taxi. This is impressive. Right now, they're not partnering with Uber. Surprisingly, they're working with Uber's competitor, Lyft. Because of this news, Lyft has gained a huge advantage from this partnership. That's why you saw Lyft stock surge 13% yesterday, with the price shooting up along the 20-day moving average. If you already own it, hold on to it. This puts more pressure on its competitor, Uber. If Uber stock falls below the 50-day moving average in the short term, you might want to be cautious, since it dropped 5% yesterday, while its competitor Lyft soared 13%. That's a little news update for everyone. As for the US stock market, before the opening, there's a company called Crocs. We're talking about the 4C concept stocks. One of the CS, some people say you could cheat on exams with it. In the future, you might not be allowed to wear smart glasses during tests because there's too much information available. Not long ago, I don't know if you saw the news, but there was a story about gambling. That's not allowed. The House will always try to stop it. Wasn't there a legislator or congressman who went into court and tried to secretly record what was being said? He wore smart glasses and secretly recorded inside because those smart glasses, you can record video, right? You can take pictures. So after someone got caught using them, it became a big deal, and now you can't wear smart glasses in court because of privacy concerns. Someone could just wear smart glasses since they have cameras and live stream the whole court session, broadcasting everything from inside the courtroom. So there are privacy issues. Google actually invented and released the so-called Google Glass before, but it didn't sell well because it was too expensive, $1,500, which was a lot over 10 years ago, back in 2013. At that time, Google was the first to invent smart glasses, but they didn't sell well because the price was too high and the features were too limited, so they never really caught on and just disappeared. Then, after a full 10 years, as the technology became more widespread, who made a big leap forward? Meta. Meta first had huge success with their VR headsets, and now they're working with Ray-Ban to make these lightweight smart glasses, which are also selling like crazy, with a 78% sell-through rate for Meta. So honestly, that's pretty impressive, even though Zuckerberg was impressive. Color Trade and others in pre-market US trading rose 5.91%. Solar, energy, health products, semiconductors all rose about 3%. NVIDIA up 2.5 to 3% pre-market. Micron Technology rose 2.35%. Many companies, including Lily Coco, up 2%. Due to monetary policy interest rate cuts, there's a chance of a rate cut in October, possibly another in December. Since rate cuts are good for the US stock market, today you can see that basically everything, big companies, small companies, even random ones, is up. Gains are quite significant, averaging around 2 to 5%. Lockheed Martin dropped 4.2%. Best Buy and Johnson & Amp. Johnson fell 0.23%. These minor declines, with no major blue-chip stocks affected, kept the U.S. stock market relatively positive. For sectors like the Philadelphia Semiconductor Index or tech stocks, pay closer attention. Intel had good news. NVIDIA invested $50 million, acquiring about 5% of its shares. This could lead to a significant rally in the entire tech sector and the Philadelphia Semiconductor Index. Such an upswing might also drive the performance of the Taiwan stock market tomorrow. So that's something you can look forward to. The Dow Jones Index remains strong, rose 0.53%. The Philadelphia Semiconductor Index dropped 0.31%, but it's holding above moving averages. The Magnificent 7 Index is strong, staying above the 20-day moving average. Today, there's a lot to discuss. Tons of information, including monetary policy, individual stocks, regional sectors, and more. At 7, the latest news came out about NVIDIA investing in Intel. I'll give an in-depth analysis. I hope before the US stock market opens, everyone can become steady on their investment journey. When class is over, remember to like, subscribe, and share. I wish everyone smooth trades.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.